Hey everyone, it is Evan here from the Trade Risk on Friday, December 20th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into the charts here, or to our dashboard first. Major indices all on the day were higher. We did have ex-dividend dates today on the S&P 500, I believe the Dow as well, but both the SPY and the diamonds here a little bit skewed to the downside. So in other words, if we look at the charts of each of these, compare the actual index, the spot index versus the ETFs. So if we look here at the S&P 500, the index on the day here today on Friday, we were up 0.5%, so 0.51%. We had a gap up and we basically just held sideways for most of the day. If we look at the SPY ETF, same exact quote in theory chart here, the SPY here is showing a close down 4 pennies or red on the day. So the difference is that the dividend got paid out today here for the SPY ETF, which does skew the charts to the downside to reflect the payout in that dividend. So if you're doing some homework this weekend, if you're looking at charts, then it'd probably be best to use those use the actual index values here just to get a more accurate, picture of where price is and sort of what it's doing with these nearby levels. So with that said, the day here was constructive overall, finishing out a very impressive week, almost 2% on average across the board here. Nasdaq 100 leading the pack this week, 2.29%. All the major indices above the 1050 200 SMA and above last week's highs. If we scroll down and take a look at sectors, we got semiconductors still at the top here, utilities jumping to the second spot, which is new. So utilities up there, followed by healthcare. And on the downside, we had industrials, we had financials, we had staples, rounding out the underperformers. Industrials and financials just slightly negative here over the past week of trading. Now, if we go to major markets, silver at the top of the list, followed by China and the S&P 500, all rounding out the top three, kind of neck and neck in terms of performance. On the downside, we had TLT, we had middle of the curve, we had 10-year bonds down minus 0.8%, followed by volatility, the VIX, sliding just a little bit here on the week as well. Excuse me. So with that, let's jump into the charts. Let's take a look here at the weekly picture of the S&P 500. And I think what's most impressive is just, let's clear up some of these lines here. The most impressive takeaway here from this chart is that we're actually seeing some acceleration to the upside right now, which is quite impressive, because when we really think about where this run started, which was back here in the second week of October, we've basically gone, I think this is 10 out of 11 weeks in a row higher, or is it 11 out of 12 weeks? But either way, very close to just a perfect ascent here over the past 3 months, with basically uninterrupted rising prices here by the S&P 500 and broadly, the market overall. It has been a very strong fourth quarter here for the markets. It's continuing so. There's only 4.5 trading days left in the year. We've got a half day on Christmas Eve next week. Markets closed Christmas. Then we have the New Year's holidays. So 4.5 trading days left. That's all we have in 2019. It's going to shape up to be one of the strongest years in the history books, frankly, for the markets. And it is looking to kind of just go out with a bang here and really just kind of surge to new highs. That's certainly the path that it's on. Markets, really this is going to be kind of the same spiel that we've mentioned over the past couple of weeks here, is the same dynamics are at play. We're in a markup phase, strongly uptrending environment. Most cases, this is all-time highs across the board for ETFs, for indices, and for a lot of major and for a lot of individual stocks. It's not, of course, universal. There are some things that aren't trading at all-time highs, but broadly speaking, there's a lot of 52-week highs, a lot of new all-time highs. There is little to no, overhead supply in a lot of these names, and the market is continuing to, mark up and march higher accordingly. Now, of course, this has to end. This will end at some point, right? This can't last forever by any metric. We are still still overbought. We're stretched to the upside, so that we know, but the timing of when this ultimately moves sideways, pulls back, or just really has a change in market dynamics is anybody's guess. And, I mean, one of the beauties of publishing these videos and getting feedback on videos is, it's almost been like clockwork, where I'm seeing people, write me or respond and basically say, this is it, the top is in, or you'd have to be nuts to be buying up here, and depending on your time frame and strategy, that's entirely reasonable. But the point is that trying to pick a firm spot here is uniquely difficult on when this ultimately stops. So basically, at this point, it's trying to, continue with the trend, continue with the momentum, have that exposure, because that's what's paying right now. But just make sure you have a strategy in place to get off of the roller coaster when it starts to fall the other way. I mean, that's ultimately what our job is here as traders, I would say, in this type of market environment, is to participate as best you can, but realize that you do have to protect yourself when this ultimately does start to come the other way. So without repeating a lot of essentially the same comments from the past couple of weeks, there's really not any new analysis here that I could really present. In the short term, we have levels, and this is the great thing about using simple support resistance levels here to measure risk against. But as the market climbs, we do have we do increasingly have higher level kind of breadcrumbs, if you will, of where the market pauses, where some supply transacts and takes place, and we can use that to measure risk against. So right now we could use 31.89 or so. That was essentially where we stalled out here Tuesday and Wednesday of this week. It was the highs from Monday as well, or the closing price from Monday. So right in here is a pretty good spot to just measure that pivot against and to measure some risk against. And if we started to reverse course in the coming days or weeks, then this is a good level to have in your mind of where you would want to see buyers show up, and if they don't, then maybe we have a little bit of a change of character in the short term. So that's sort of the upper level we can use. Past that, we have the old breakout level around 31.53, and then down here we just get subsequent levels down, going into the 3100 levels. So that's on the downside, some levels we could pay attention to here. On the upside, of course, all-time highs, so there's not much not much to think about there in terms of overhead supply. Now, if we go to the IWM here, we look here at how this performed. We can see on the week it was 1.57 to the upside. We can see that it is starting to march higher. It did resolve this week. This little consolidation, this little pause in the action that it took over 4 days here. So starting from Thursday of last week, Friday, Monday, Tuesday, all had highs coming in right around 164.70. We kind of chewed through that, and we started to and continued to sort of lift higher into the end of the week for the Russell 2000. So Russell 2000 small cap stocks continue to look good. Nasdaq 100 also looking good here, extending to new highs. Again, we look down here and we can see that it's up 8 days in a row. So we know it's overheated, we know it's extended, and we have to be mindful of risk, especially new risk that you're putting on. But certainly the Qs have that momentum and strength to the upside, but we do have some short-term, again, overbought conditions. So we can, be aware of those as we continue to try and hopefully follow this trend. So that's it for the major markets. If we look at volatility here, take a look at where VIX closed. It did hover and still maintain above 12 here. So it's not giving up and breaking to new lows. It's not back below 12. So interesting there that it's not, kind of cliff diving any lower here despite markets moving to new highs. Again, 12 here for a VIX is still, historically on the low end and below its long-term average. So this seems, fairly reasonable here, but it is kind of at least notable or something to pay attention to here that we are seeing a VIX kind of stabilize around this area. So that's the market environment overall. Uptrends continuing, all the same kind of bullish comments there in place, and short-term overbought conditions still persisting. Call it even intermediate-term overbought conditions now starting to persist. Now, if we look at some other major markets here, we go to TLT, was down almost 2% this week, so a pretty good downside move here in bonds. When we look here at the weekly chart, however, really not getting any change in structure. This sideways consolidation that we've talked about since talked about recently, of course, over the past many weeks, that started in August, is still taking place here. Kind of got a series of lower highs and, I guess lower lows still at this point as well, but mostly, moving sideways here over the past many months. If we look at gold, we can see gold maybe starting to get a little more interesting here as it gets to the top end of this channel. It still has more to prove. Again, we zoom out here since August. This has been consolidating and pulling back as well. So for gold to get really excited again, probably need to break above that channel, get above 142 or so. So we got a few more points to see if the bulls can get through that into the coming weeks. If we go to silver next, we look at silver here. You can see I had a nice week, 1.26% to the upside. And if we look here on a weekly basis, it's back to the past 5-week highs. So essentially where it came slamming down here that first week in November, had a very violent 7% down week here, first week in November. Then it basically has been chopping around sideways for about 6 weeks now. And it is climbing to the upside here. It's climbing back up towards these highs. So silver here in the short term, if it can continue above $16, it can break above this range and perhaps start doing some work and recovery back up to the upside. We'll have to see if silver can get that confirmation or that follow through next week above this area. Last but not least, if we go to energy next, you can see oil here on the week was up 1%. It did fade off of highs. It did get as high as 1285 here, but it did end up pulling back a little bit, closing off of those highs, leaving a little bit of a wick up there. Again, you can see if we just zoom out here, it is still in a lot of kind of prior supply traded in this area. It's holding above $12 though. The trend has been up in the short and I guess intermediate term at this point, couple of months. So, bulls still getting the job done there, but given the tail up here, maybe a little bit of a breather is due here for USO heading into the end of the year. And natural gas here did close higher. It is, again, right here at the kind of the abyss here, looking over the ledge of new potential lows, multi-year lows, in fact, but it is trying to hold on here. It's trying to gather a little bit of interest down here, get a little bit of divergence going with MACD. If we can start getting above $18, again, that's the level we talked about in the past video. That's where we want to see it happen, is above 18.05, get a surge above there on some volume ideally, and that would give some confidence there that maybe a short-term rally is in sight here for natural gas. So that's it. That's for the major markets. Let's take a look at sectors now real quick on what performed and what didn't. Semiconductors here at the top of the list. Number one performer, 2.6% over the past 5 days. You can see very impressive action here. Did go sideways for really since last Friday. And it stalled out for the beginning of this week, but it did follow through nicely. MACD moving back to highs, getting quite vertical here, but this is the leadership group into the end of the year, and it's continuing to put up a very strong year. Let's see what the performance is on the year. 64%. It's incredible for the sector to be up that large in just one year. So semiconductors moving up. Utilities was the interesting one, though, moving to the top of the list as well, almost 2% back up to these prior highs. Maybe a little hesitation as it bumps back up into the October highs here, but XLU still in a very defined, well-defined uptrend here in the longer term, back to these prior highs here, and looking pretty good. So XLU, not sure I'd chase it here. Maybe see it settle in around these highs and then break out. That's certainly the ideal situation. XLV number 3 here, up almost 2% on the week, and again, on the week. And again, if we look here just at the the ascent, the angle at which this has been rising. This has been very impressive, leaving all of this prior supply back here in the dust, getting quite vertical once it broke through $94. Continues to do so. It's very stretched here to the upside, but trend momentum very strong and persisting. So XLV, congrats to any of those that has been invested in that for that run. Now on the downside, we had XLI basically took a breather this week. It's still kind of chugging along sideways here. It's got some clear defined resistance around 82.60. Does make this a good rotational candidate. So again, if we can start getting a surge over this this little consolidation in the short term, and then eventually over 82.50, 82.60, you could see this as a good potential breakout candidate in the near future. Financials taking a little breather here as well. They've been performing pretty strongly over the last quarter of this year, but it looks like they're due for at least a little bit of a pullback or rest right now. They're in the midst of a multi-day pullback here, so maybe give them some time. But financials had been on a strong run, now just kind of waiting for that digestion to take place. And last but not least, Staples here did break out just a few weeks ago over 61.60. They're trading basically at all-time highs, and they're still looking pretty strong here, pretty much in play. A lot of these individual stocks under the hood are still working here. So XLP underperformed on the week, but still technically very strong. So that's it. That's the recap for the last full week of 2019. It's been a monster run, and there'll be, in terms of programming notes, next week, no midweek videos going on, or Tuesday on Wednesday. So the next video update from me will be next Friday. So taking a couple of days off for the holiday there. Be back next Friday, and then we'll be kicked into 2020. So have a great holiday time off. Thanks so much for watching throughout certainly this video, and if you're a routine listener of the channel of our weekly videos, then thank you for that. Enjoy the holidays, enjoy the time off, and we'll see you back here in the new year.